Chapter number 6 on determination of national income. Under this, we have two headings. One is national income accounting, and another one is Keynesian theory. So, when we talk about Keynesian, he is the father of macroeconomics. So, what and all he decided, which means what and all his thoughts were, what and all he was talking about. So, everybody were following that, and that's why we call him as the father of macroeconomics. So he was giving a few terms. Okay, probably let me go for the annexure page first before continuing here directly. Because here will come across many terminology, so you need to understand what those short forms means here. I have given this in alphabetical order. Starts with A. Aggregate demand AD, because it will go for more of derivation side, more of expression side. So we need to understand what is AD, what is AS and all. When we talk separately about demand, it's demand. But when we talk about demand together for all the commodities, we call that as aggregate demand. Okay. Usually aggregate demand will represent by Y. Later period we'll call this as national income. Okay. And when we talk about supply of many, then we'll call this as aggregate supply. B stands for basic price. Will come across market price, basic price. So B stands for BP, or B stands for basic price. C is consumption. We have the accounts called as current and savings deposit accounts, where the public hold the accounts, right? When you deposit for some 40 days or 45 days, it calls as term deposit, right? So likewise, we have current and saving deposit scheme, that is accounts called as CASA accounts. When you talk about tangible assets, we'll talk about depreciation, and depreciation, another name for this is consumption of fixed capital. So if you come across this CFC in short, it's consumption of fixed capital, which means we are talking about depreciation. Normal in accounts la depreciation pathirpingal, and the depreciation now we'll be coming across two types of fiscal policy. One is contractionary and another one is expansionary, and here CFP stands for contractionary. Everything is taken to record, and that record is managed by the organization called as Central Statistical Organization or Office, or CSO. So O stands for organization or office. Going for D series, D stands for depreciation. Usually this symbol we mention this for difference, okay, which means what? Change is happening, okay. So that's delta. The symbol name is delta. It represents the changes. DP is the domestic product and DPI is the disposable personal income, okay. Personal income enakku 10,000 ரூபாய் வருது, okay. I cannot spend all the 10,000 rupees, right? I need to have something 2,000 rupees for insurance or something like that. Remaining 8,000 only I'll be spending. Okay, for insurance or tax, I need to keep an allocate of money. Okay, so disposable personal income will be different and personal income will be different. Then going for E series, EOQ economic order quantity, expansionary fiscal policy. And when we talk about the economy, we cannot talk the economy. Obviously, we are going to talk about the Indian economy only, but still we cannot completely talk about Indian economy, because for external, you see, our business is globalized now. It's not completely we are doing inside India. So it's globalized. We need to talk in a wider angle. So we'll discuss here with respect to one person outside, which is foreign. That's the external world or the foreign. So E or R. Then going for F series. F usually stands for firm or the organization, which we talk in terms of companies. Firm means don't think in a law angle. Law of firm na partnership. Okay, in firm na we talk about organization, corporations. Then we'll be talking about see one of the three prices: factor cost, or what we call as factor price, FC or FP in short. This is capital I. Can please correct it. FIs, financial institutions. FID, factor income earned in domestic territory. Okay. The income earned in domestic territory. What do you mean by factor income? I'll discuss when I start with the topic. And similarly, we'll be talking about factors of production, FOP. Then we'll go for G series. G stands for government. GNS stands for goods and service in short. GDP stands for gross domestic product. GNDI stands for gross national disposable income. Gross national disposable income. GNP stands for gross national product. Probably in the very first topic 6.1, we'll be discussing how we are going to calculate all these different terms. Okay. H or I usually stands for individuals representing household individuals. Okay. I stands for injections. L stands for leakages. So if government is anything giving like subsidy to you, okay, adukku per enadhu injections. Money is coming inside, injected. Okay. When you talk about paying tax to the government, it's a leakage of money. It's going out of you. It's called as leakage of money. M is the import, X is the export solo. M of F is, Ministry of Finance. Usually for this O, right, we'll write in short only. We'll write in small alphabet. Okay. Then MP, market price. So how many prices we have in total? Basic price, factor price, and market price. Three prices. Then we have the statistics and program on ministry. So MOSPI. This has to be actually small o, but capital O that's why I have capital O. And we have M minus X. Please highlight this one. We'll be using this on calculation purpose. M stands for import. Okay. X stands for export. Usually will not use I and M for the expansion. Okay, we use M for import and the second alphabet X for export. When it is given M minus X, we are talking import minus export. If it is given X minus M, we are talking first one is what? X minus M. Yes, please help me. Export first minus import. Okay. See, export is there. In that, you are reducing the import means this is nothing but net exports. Okay. Is it okay? Import is there. From that, you are reducing export means it's nothing but net import. Okay, fine. Carrying over with N series, net domestic product, NDP, net factor income from abroad, not from India, from abroad. NFIA, national income NI, national industrial classification NIC, net of indirect taxes NIT. All these will be taking care in the problem solving areas. Okay, in the definition and problem solving areas. Continuing with NNDI, net national disposable income, NNP, net national product, NP, national product, NSA, National Account Statistics, NSDP, Net State Domestic Product. All these again will be calculating in the very first topic. I request you to go through these terminologies, please. So next we'll go for P series. PI stands for personal income. PPP stands for purchase power parity. How much you are capable to purchase. So in that sense, physical quality of life index PQLI. So we have done this topic, index number, you remember, in statistics. We are using that concept over here. Then S stands for savings. Probably we'll be using this term in the future. SNA stands for UN System of National Accounts. So this is S series. Then we'll go for T series. T stands for tax and T stands for transfer payments. Then we'll go for X series. X series. X stands for exports and X minus M stands for net exports. So we have X minus M and we have M minus X. There we discussed M minus X and here we are discussing net exports X minus M. Then we discuss Y. Y stands for aggregate demand. That was the first one, right? There we were discussing aggregate demand and YD. If D is written over here, then we call this as disposable income. Is it okay? So with the help of all these abbreviations, let me start with the topic 6.1. Only for 6.1 and 6.2, that sixth unit will be using all these headings for. Okay. I have divided this into two headings, two parts, part A and part B. Part A completely will deal with all these terminologies and how we are going to find this national income and all. Part B will go for the miscellaneous content. So if you check with your chapter material, if you just go and directly compare chapter material and SSA material, you will not find exactly the same heading. Okay. So this what I have done is referring to the book back problems given in your chapter material. I have taken that format and I have fitted all the theory content in this one. Okay. So full theory but it's a table. So if you just scroll the pages, you can find all, you will find like tables only. Okay, full tables are book. Just turn for some two or three pages. You'll find table A, table B. If you understand this table format, you can fit all the headings over here. What are the problems given? Because this topic is somewhat more of problems, which means you have to understand more of terminologies and substitute in the heading. Okay. So part A is actually a briefing about our economic activities and all. Usually when we talk about activities, I can say economic activity and I can say non-economic activity. I teach economics, law, math to you. It's an economic activity. The same content I teach to my daughter. It's a non-economic activity. Okay. So two activities. So what are the things you are going to consider? It's only economic in nature. Non-economic activities will not be considered. Two types of goods. One is final goods and one is intermediate goods. See, you should not say work in progress or something term related to finished goods and all. Okay, when we say final goods, you can directly consume it or you can keep it, use it for more than a year. We call this as investment and all. Okay, the investment is, see, I'm producing some 100 units. All the 100 units is not sold immediately because there is no demand for 100 units. Only 90 units are sold. Remaining 10 units, next month are sold, sale பண்ணுவீங்க. Next year are sale பண்ணுவீங்க. Which means what I'm going to use it for next year period. Even then, I'll call that as final goods because I cannot use it for my further production process. If I use it or if I resell it or if I use it for further production process or if I use it in the same year, it will be called as the intermediate goods. Okay, please try to highlight all these one. Note, when we talk, see, we are going to talk about national income. So when we talk about national income, we'll be especially focusing on GDP, gross domestic product. Here, when we define gross domestic product, we are going to use only final goods. We are not going to use intermediate goods because you need to be very clear with what do you mean by final and what do you mean by intermediate. And when we talk about inventory investment, it's the goods produced this year but sold later year. Okay, not this year. We'll sell it. We produce it this year, but it will be sold in the next year. Okay. We have to understand four economic sectors. What type of activity you are following here? Economic or non-economic? Economic. So we are going to follow four economic sectors. One is household, one is the corporations, one is the government, and another one rest of the government. When we say rest of the government, there also when we talk about a foreign country, in that foreign country also the households will be there, the organization will be there, the government will be there. Am I right? When we talk about India, okay, what are there? Households are there, organization is there, government is there. So one sector, another sector, another sector. This is the fourth sector, foreign sector. Where if you go for the foreign sector, there are households, there are organizations, there are governments. So usually what I say is, even though there are four economical sectors, I used to remember like 3 plus 3. This 3 is nothing but foreign. Total of 4 தான் but ஒரு convenience சேக்காக 3 plus 3 ஞாபகம் வச்சுப்பேன். Okay. Then we have two enterprises directly, both are under direct control of government only. We'll say departmental, which is the direct government like transport, police and other things and all. When we talk directly government only, but it can be like PCs and also only on the mother in the, we'll call it as non-departmental. Other than the departmental, it's separated from government like steel manufacturing, oil exploration, electricity, financial institution. These are all will be covered under non-departmental. We have four territorial sectors. Okay, first one, primary. What is the primary occupation of ours? Agriculture, fishing, forestry, mining. Secondary, heavy and light manufacturing, oil refinery, energy production. Tertiary is the third level. Primary means what for? First level. Secondary means second level. Tertiary means third level, which is the service sectors. Okay, probably we can define as market and non-market. When you say market, trade, transport, real estate, personal services and all will be covered. When you say non-market, human health, social work, all these things will be covered. This is the third level. Fourth level, quaternary, technology developers, professional bloggers. These are all covered under fourth level. Fourth level is called as quaternary. Okay. Okay. We'll talk about three basic incomes: labor, capital, and mixed. What is labor? I work as a employee, salaried employee. I get salary wages. So this income is called as labor income. I don't work. என்கிட்ட பணம் இருக்கு. I make investment. I give the loan. I make investment. Okay, I get as what? In return, what I get it? எனக்கு என்ன ரிட்டர்ன் வரும்? நான் உங்களுக்கு கடன் கொடுத்தா எனக்கு என்ன ரிட்டர்ன் வரும்? இன்ட்ரெஸ்ட். நான் உங்க கம்பெனில இன்வெஸ்ட் பண்ணா எனக்கு என்ன ரிட்டர்ன் வரும்? Return on investment, dividend. Okay, all this will be covered under capital. How the income is being arised? When you work as a laborer, you'll get it as salaries. When you invest in any organization or something like that, you get in return of investment or it's mixed like professionals as. Okay. நீங்க professional வந்து work பண்ணீங்கன்னா, you cannot call that as investment, you cannot call that as labor. Correct? In that case, you call it as mixed. For example, CAs, not under employment, practicing, consulting. Okay. So wages, salaries, they'll get fringe benefits, employees' contribution to social security. These are all covered under labor. When you talk about capital, profit, interest, dividend, royalty, when you talk about mixed, farmers, I make it, but I myself use it. Okay, sole proprietor, professionals and all. Incomes, actually, when you talk about incomes, these are considered as the macroeconomic aggregates or what you call as the parameters. We'll talk about three types of income in the first line: national income, national level, state income, state level, and district income, district level. Second, when we talk about domestic income, we can talk this for private sector and public sector. When we talk about personal income, the personal income is what I get it, but I cannot use everything, which means I have to use only a certain portion which can be named as disposable personal income. Okay. Next is disposable national income, other gross national domestic income and national domestic income, then public income and private income. I request you to highlight this heading. When we go for finding this national income, we actually have three methods or three different approaches or three different angles we can find it out. One is what is a product you manufacture? That is value addition. So in that way you can do it. Another is how the income is generated. Okay, that's what you call as income method. நான் வாங்குறதெல்லாம் பணம் சம்பாதிக்கிறதெல்லாம் செலவு பண்ண தானே போனேன் செலவு பண்ணுவேன் இல்ல அப்படி பார்த்தா that's called as expenditure method. So product method, the another name will be called as value addition method. Income method, how you are going to get the income from different sectors, that's what you call as income method. And expenditure method with respect to different final sales of goods and services. The different goods and services we have, right? All the final sales of goods and services. We'll talk about two values. One is ex post value and another one is ex ante value. Ex post value means realized value, okay, which means actual or accounting value. Ex ante value means, you can please write a word over here, anticipated value. Ex ante means what? Anticipated value, okay, intended or planned values. Shall I take over? We'll talk about measures in the product side: gross and net, gross domestic product, gross national product, net domestic product, and net national product. And different types of GDP will come across. One is nominal GDP and one is real GDP. When we talk about nominal GDP, we are talking only about the current year. But we cannot see, we have absolute and relative values, and we were talking in index number. What do you mean by absolute values? That exact value alone. When we compare with the base year, we'll come to know what is the real GDP is. So real GDP is the inflation adjusted. Again, please link this with index numbers. Statistics la நம்ம பார்த்தோம்ல deflated value is equal to, okay, the inflation has to be adjusted. So if this inflation is adjusted, when you consider this is the base year, you'll call this as real GDP. When you talk about this base year comparison, we have to make the comparison with different time periods. Okay, so this is about real GDP. Okay. So next I have to go for table A. So these are the abbreviations and these are the basic knowledge we need to understand before. We'll go for calculating gross domestic product. So even though we are going to talk about national income, first we'll go for calculating gross domestic product only. This table A is covering GDP, gross domestic product at market price. For convenience sake, you can directly refer this table row heading. Row heading is production or income, where it is earned in India or outside India, foreigner. Earned by whom as the column heading? Earned by the resident or citizen or the firm. In India or outside India, foreigner. Among these things, only this will not be covered under GDP at market price, which means what? Both foreign and foreign. Please try to highlight both foreign and foreign. A foreign resident earning income in foreign itself. So that will not be covered. This one shaded in blue, the GDP where the production or income is happening in India, whether the resident is Indian or foreign, anything. But where is the income happening? Where is the production happening? In India. When you talk about GDP, you have to be very clear. It's talking about the market value. That's why we say it's a market price, market value of all final goods only. You remember we were discussing about two types of goods. One is final and one is intermediate. Here we are talking about the final goods. We are talking about two activities, economic and non-economic activity. We are talking here about only economic activity. And what you're giving? Goods or and services. Gross of depreciation, which means what? Consumption of fixed capital produced within domestic territory of a country. When we say production in India, we say produced within domestic territory of a country. This is GDP. If you have the same content involving production or income in foreign, that is GDP along with NFA is foreign income earned in abroad. Okay. So GDP plus NFIA will give you gross. The production is done in foreign. Who is doing it? Indian is doing it. Okay. So this column is referring the Indian, right? That's why this is also included. Okay. So national income, net national product at factor price will be FID, factor income plus NFIA. What this NFIA could be? NFIA, net factor income from abroad. You just pull up all the foreign income by Indian person in foreign. Okay. And in that you deduct foreign income by foreign person in foreign. Okay. See, ரொம்ப simple. If everything is happening in foreign Indian, foreign income, everything is happening in foreign, you don't consider. If it is already considered, deduct it. Okay. We can do it this way, or net compensation of employees plus net income from property. Compensation means what? For salary. Okay. Plus net income from property and entrepreneurship. Okay. Net property and net income from property and entrepreneurship and net retained earnings. If you add all FIE. FID is domestic factor, domestic income. So factor income which is earned in domestic territory. Whenever D is involved, we'll talk about domestic where only India is involved. Within the domestic territory it's involved. Whenever national, which means foreign is also involved. Okay. What are the four factors of production? Land, labor, capital and entrepreneurship. If you have a land, உங்ககிட்ட ஒரு property இருக்கு, land இருக்கு, what you will get? So these are factors of production. This is the income from the factors of production. We call it as factor income. If you have a land, you will get rent. If you are a laborer, you will get salaries and wages. If you are investing, you will get interest. So generally return on investment. And if you are an entrepreneur, you do the business, you get the profit. Is it okay? So these are the four factors of production and the corresponding factors income. Let me go for table B1. Under B, we have B1, B2 and B3. That's why I have named this as table B1. This is calculating GDP. Earlier it was calculating GDP at which price? Please join with me. Earlier, table A is calculating GDP at factor price and market price. Okay. So we have the four factors of income. What are those? Salary, rent, profit, interest. Here will not mention as salary, instead will mention as compensation for the employee named as C. Along with that, the operating surplus will be included. உங்களோட main livelihood என்னப்பா வேலைக்கு போற சம்பாதிக்கிறேன் compensation of employee. Apart from that, rent, profit and interest. So these two are included. If you are self-employed, there will be a mixed income. Remember we were discussing about this mixed income. Okay, so that will be included. And if you own a land, there will be consumption of fixed capital D, that also will be included. And if you include all these things alone, it will be called as GDP at factor price. Okay. So what is GDP at factor price? C plus C is for compensation plus O operating surplus plus mixed income plus D. All these things will be discussed here problem wise in the next topic. Keynesian theory of national income accounting we discuss as theoretical concept. Okay. So all these included, you will get something called as GDP at factor price. Okay, name this as 1. Along with this, you add all the indirect taxes. Name this as I. If government is giving any subsidy, see, I am doing a business, okay, and I am using solar power. Government is giving subsidy to me, which means I am not spending from my own cost, right? So government is giving the subsidy, reduce that. See, all the subsidies is for include all indirect taxes exclude all subsidy from where? GDP. Then we'll get something called as NIT, which is I minus S. So this is I minus S, which is called as NIT, net of indirect taxes and subsidies. When you use the term net, please remember when you use the term net, something is there and you have to deduct. No. Okay, what is there? Indirect tax is there. What you have to deduct? S. That's why net of indirect taxes, which is indirect taxes minus subsidy. With this GDP at factor price and with this NIT, if you add it, you will get something called as GDP at market price. Okay. Table A, we have defined GDP at market price. This is the definition table. Table B1 gives you the calculative value of GDP. Please try to understand. Okay. Please try to understand. Along with this, if you add NFIA, remember table A, we have done this. Along with GDP at market price, if you add NFIA, what do you get? You'll get GNP. Is it okay? Before going for the continuation, I request you to go for table A and B1. Market price. Table A is giving the definition of GDP at market price. Table B1 is calculating GDP at market price and factor price. So factor cost. Along with that, you include what? NIT, you get GDP at market price, okay? And from there, if you add NFIA, you get GNP. And I don't know how far you noted this one. Let me reload the page. When you go for calculating the net of indirect taxes and subsidy over here, I place a star mark, right? Asterisk. So it's something you have to take a note of. See, we are talking about internal goods only. We are not talking about external. So we have to talk about the internal inputs, internal labor, and internal capital goods. So all the indirect taxes you are paying for internal inputs, you are paying for labor, you are paying for capital goods. That only you have to consider. Okay, it's already included in factor cost. So probably to avoid the duplication, we'll do it. Now we'll understand all the above parameters in short, where we are referring as table B2, because sometimes in the question paper they will not be giving you everything in detail. They'll give the main data where you add and subtract and get the answer. Okay. So in that case, already we have done this one. See, what is GDP at factor cost? We get some value. Add the net of indirect taxes. We'll get something called as GDP at market price. Along with that, add NFIA. We'll get GNP. See, so far this column or the earlier table, we are talking about GDP, which is gross domestic product. Now we'll extend one parameter, which is national domestic product. Okay, so not national, net domestic product. See, you have gross domestic product. See, what's the difference between gross and net? From gross, you deduct something, you get net. Okay, so here is net domestic product at factor cost means you take this value which you calculated as compensation plus operating surplus and all. Along with that, if you depreciate the value, which means what? If you remove the depreciated value, what you'll get? Net domestic product. What does D stand for? Depreciation. Okay. Likewise, we have GDP at market price. Okay. And from there, you remove the depreciation. What you'll get? You'll get the, yes, please join. You'll get the net domestic product market price. Okay. So for gross to net, you deduct the depreciation. For DP to NP, what you have to do? You have to add NFIA. See, this is GDP. You add NFIA. What you'll get? GNP. This is okay. Okay, shall I take over? Now we'll go for table 3. Actually, table 3 is our main heading, national income. How are you going to get the national income? You get the national gross product at market cost, market price. Then you go for national income. So have you got this one? Gross domestic product at market price. You deduct the depreciation. What you'll get? Net domestic product at market price. You remove the indirect taxes, net of indirect taxes. What do you get? See, this is reverse calculation. Okay, you remove the net indirect taxes. What do you get? NDP at factor cost. Then you add NFIA. You get national income accounting. National income accounting is nothing but net national product at what? NFIA. Sorry, not NFIA, factor cost. What is national income? What is the definition of national income accounting? Net national product at factor cost. Okay. See, now think logically. Factor cost, you will not talk about NIT. Am I right? Am I right? Factor cost is paragi NIT paragdan MT. So when you talk about factor cost, you will not talk about NIT. That's why we are removing over here. Actually, what's the heading over here? Starts with market price. So you're removing what? NIT. See, it's not GNP. It is NNP, net national product. So you should not talk about depreciation. So remove depreciation also. Okay, remove this one also. We are talking about national income. So foreign income earned in abroad is also included. So NFI is included. Can you think this logically? Let me come again. What's the difference between factor cost and market cost? You have to add NIT. Am I right? Here, when you talk about national income, we are talking about NNP at factor cost. So we don't want to have NIT. So we are removing it. Is it okay? And when we talk about NNP, it's not gross national product, it's about net national product. So we don't want to have depreciation. So remove it. But we are talking on the whole, whatever the production or income happening in India is considered, whether it's done by Indian or foreign, that doesn't matter. It is happening in India, then you have to consider. When it's happening in foreign, you have to consider. So what happens? You have to consider all the values. So NFIA, national income from abroad, is also considered. Okay. So three types of prices. We have market price, factor and cost price, and basic price. So when we go for factor cost, so we have factor cost. What is factor cost for? The term itself says factor cost. Four factors of production. What are the four factors of production? Land, labor, capital, and what's the other one? Sorry. Organization. Entrepreneurship. Organization is the company. Entrepreneurship. Entrepreneurship will get the profit. From land, what you get? Land is rent. Okay. Labor compensation. Okay. This one, capital, interest, and entrepreneurship, profit. If you add all these factor income, you'll get GDP at factor cost. Okay. In this, if you talk about production tax and if you talk about production subsidy, you'll get something called as basic price. Okay. In this, if you talk about product tax and product subsidy, we'll call this as GDP at market price. Let me come again. You have GDP at factor cost. You take NIT, what you get? GDP at market price. Am I right? So this was done in the earlier table. Now, when you talk about this NIT, what is this NIT? What is NIT? Net of indirect taxes. Indirect tax you have to remove subsidy. Now the problem is under indirect tax and under subsidy you have two classifications. One is with respect to production. Okay, one is with respect to product. Likewise for subsidy also, one is with respect to production and one is with respect to product. Is it okay? Now, if you consider the subsidy for production and if you take this NIT, which is NIT for production alone, and if you less. So you need to understand in a better way, right? So what do you mean by production tax? What do you mean by production subsidy? What is product tax and product subsidy? When you go for production tax, where I'm manufacturing this item, I have a land. For that land, I have to pay the revenue, right? For that land, I have done the registration, stamp duty has paid, right? So land revenue, stamps, registration fee, tax on profession, factory license vangirpinga, tax paid on local authorities, pollution tax paid. This is all related to what? Production tax. Okay. Whether you are making a bun, plain bun, or whether you are making a cream bun, this is all made in a factory land area and you want license to run the factory, etc. And government is giving the subsidy for railways, village and small industries, MSME and all, right? So when you consider GDP at basic price, only those related to intermediate outputs are considered and others should not be considered. Please highlight. Then we go for product tax and product subsidy. Product tax, now we name it as GST, right? Earlier it was excise duty, sales tax, service tax, import and export duty. Now instead of excise and sales tax, we have in simple GST, goods and service tax. And food subsidy with respect to food, petroleum, fertilizers and all. Okay. Please highlight each and every page of this topic is important because everything will be using in the problems. Okay. So they'll not be mentioning the heading as production tax. They'll be saying as pollution tax. What you have to do? You have to consider this under production tax. They'll be saying subsidy related to food is given. Where you have to consider? Consider it product subsidy. Okay. Continuing. So now we'll go for three methods to evaluate national income. First method is value addition. Second method is income method. Third method is expenditure method. You first check which method you have to apply from the question. If it is given in the question, you have to apply that question. Okay. In India, value addition method is used for agri sector. Income method is used for small scale sector and expenditure method is used for construction sector. Please make a note. Usually we'll do two steps in calculation. Step 1, we will calculate GDP at market price. So these three methods, even though we say these three methods are for national income, we are not going to use this method directly for national income. Instead, we'll use these three methods for calculating GDP. Okay. So calculate GDP using any of the one of the methods. Then go for calculating NI from the table B3. Okay. Use the table B3. What is table B3? Join with me. What is table B3? This is B3, right? GDP at market price if found means you can reduce depreciation, you can reduce NIT, you can add NFIA and get national income. Is it okay? Now, status in India, already I have done this one. First one, we'll go for value addition method. You are adding more value. That's what you call as value addition method. You have another important is alter names. Okay, please remember, you may not expecting only this name over here. You may be expecting the other names also. It may be called as product method. It may be called as industrial origin method. Where you produce all these in the industry. That's what it's called as industrial origin method. And ultimately, you get some output. So that's what you call this as net output method. For which this is suitable. This is suitable if there is no duplication of contribution. Okay, for each and if you're making a bun, you need some specific process. You need a specific value addition. If you're making a machinery, you need different types of process, different type of value addition is done. So non-duplication of work will be there. So unduplicated contribution. Now we'll go for table D. How you're going to find value addition? It's very simple. நீங்க நிறைய இடத்துல follow பண்ணுவீங்க. What is the sales? What is the closing stock? What is the opening stock? Is there any intermediate consumption? Okay. Closing stock, add it. Opening stock, less it. So it depends on plus or minus. Okay. Then intermediate consumption, reduce it. What you'll get? You'll get gross value addition. Also, this gross value addition is called as GDP at market price. Once you reduce NIT, add NFIA, you get national income value. Is it okay? Please go through till here before I continue. So value of output, gross value of output, will consider with respect to labor and capital. It includes, please highlight, own account of production of fixed assets by government. See, government is producing, government is not going to sell it. Ration goods and all like that. Enterprises and households also will be considered. I am having a small terrace farming, like I produce it in my terrace, all the vegetables, I use it, I'm not going to sell it. Okay. Imputed value of production of goods for self-consumption. What do you mean by imputed value? I am growing vegetables in my terrace. We call this as terrace farming. Probably for 1 month I get 5 kgs of vegetables. Okay. இது நானே கன்சியூம் பண்ண சேல் எல்லாம் பண்ணல. But it has a value, right? You see, if you're not having terrace farming in your garden, in your terrace, obviously what you're going to do? You're going to buy in the market. You're going to spend some money. So imputed value means even though you're not going to sell it, you're not going to have anything called a selling price, but it still has its own value. The imputed cost, imputed value. And likewise, if you go for owner-occupied houses, this is my own building. I'm not going to pay rent to my own self. Am I right? This is owner-occupied house. If I am not going to pay the rent means in the building rent value it has a value, right? In case I'm not using this property, this is my property, I'm not using this property. I'm going to go for a rental house. How much I will pay? Okay, ஒரு 500 square feet இருக்கு மேம் 10,000 rupees pay பண்ணுவேன் மேம். அப்போ இந்த building வந்து 2,000 square feet. How much I'll be paying? It will have its own value, right? That's what I call as imputed. Imputed means actually you're not spending it, but the value is there. Is it okay? So they had to include all these stuff. Even though you're not getting in terms of money, see GDP is not, see GDP is involving money. It is in terms of money, but you may not exactly get money in that. Okay, please try to understand. Hints for calculation purpose. So when we have different economic sectors like primary, secondary, manufacturing, and quaternary, please do it separately and add everything together. We have this in the problems. Okay, do it separately for primary, do it separately for secondary, do it separately for each sector, and finally pool it. And you have to include all the net products contributed by each and it's about first method, gross value method. Okay, shall I take over? The second method, income method, also called as factor income method. Whatever the income you get, you pay it. So also it's called as factor payment method. Okay. Land will yield you rent. Am I right? If you are owning a land, you'll get rent. Who will pay the rent? The tenant will pay the rent. The tenant is paying the rent, okay? So what are the payments made by the tenant is your income. So that's why we call this as factor income method or factor payment method. And also it may be called as distributed share method because it's all from different factors. It's suitable for developed countries where people properly file their IT returns. So you may guess whether it's suitable for India or what. Includes factor payments of residents and non-residents, but it should be within the territory. Okay, it should be in India. So we'll get NNPFC, okay, or national income, which you call it as NDPFC plus NFIA, or you can directly do it from table 1. Please highlight, you can directly do it from table 1, okay, table B1. So what are the things you're going to include? What are the things you're going to include? Imputed value. Already we have discussed what do you mean by imputed value. So rent for self-occupied houses, services provided by owners of production units, profits of private sector businesses. These are all imputed value. Labor income, wages and salary. You know all these, right? Perquisites, bonus, dearness allowance, DN dearness allowance, commission, brokerages, employees' contribution to PF, imputed value of compensation. When you go for non-labor income, rent, whether it is actual or imputed, royalty, interest on loans for productive services, dividends, undistributed profits of, this reserves and all, free reserves. It's for the shareholders, but it's not distributed. Only it's distributed, it becomes dividend. Okay, so undistributed profits of corporation before tax, profits of unincorporated enterprises and government enterprises. These and all should be included. What are the things to be excluded? Transfer payments. Like you'll get pension and the social insurance and all. As income is not received for any service in the current year, but definitely you'll get in the future. Future நான் GDP இந்த வருஷம் தான் calculate பண்ணேன். Please try to get my point. GDP each and every year it will be calculated. இல்ல எனக்கு பென்ஷன் வரும் எப்போ வரும் ரிட்டையர் ஆன பிறகு இப்போ வரப்போகுதா இப்போ ரிட்டையர் ஆகல. So these transfer payments are definitely payments only, but it's not associated with this current year, so you should not calculate. Okay. Receipts of sale of second hand goods. This is often repeated question. Receipts of sale of second hand goods. As of now, new flow of goods is not there. That's why you should not consider. What about the second hand goods? Means some 4 years before a car is being manufactured and the GDP while calculating for that current year it's been included over there. Am I right? அப்போ கால்குலேட் பண்ணும்போது ஜிடிபி கால்குலேட் பண்ணிருப்பீங்க. இப்போ செகண்ட் ஹேண்ட் குட்ஸ் தானே, அப்போ ஏன் கால்குலேட் பண்ணுங்க தேவையில்லை இல்லையா? It becomes like duplication. We should not have duplication. And this windfall gains, lotteries and all, it's not coming from productive activity. Do you remember table A? If you want to go for this table, can you please turn over the page? Table A. What does table A says? What is this column heading? Resident or individual or firm from India or foreign. Am I right? This is for column heading. What is the row heading? Production or income from India or foreign. This is all related to productive activity should be. Okay. இல்ல நான் லேண்ட் வச்சிருக்கேன். அது எப்படி நீங்க ப்ரொடக்ஷன் சொல்லுவீங்க? நான் லேண்ட் வச்சிருக்கேன். ஆனா லேண்ட்ல யாரோ ஒருத்தன் வந்து பிசினஸ் பண்றான்ல. அப்ப அது ப்ரொடக்ஷன்ல தானே வரும். Please try to link in this way. Okay. I may not be doing my business. See, I am a salaried employee. With this small amount, I bought a land. And in that land, somebody is doing business production. So it's a factor payment, right? For me. For him, factor payment. For me, factor income. So this will come in under GDP. But what about this windfall gains? Windfall gains and sudden மழை மாதிரி வருது. மழை மாதிரி கொட்டுது. எப்பவுமே ரெகுலரா வராது. Lotteries and all should not consider. Then corporate profit need to be separately included. When you get this word corporate profit, you should consider this as profit, corporate tax, dividend, retained earning. Everything should be included, and it should not be separately included. Okay, because it's already included. Dividend is included. Dividend is capital, return on investment, right? Is included. Capital gains, financial assets and payments out of past savings, interest paid on public debt, consumption loans, and see public debt you might have done in seventh topic. Okay, they have the details because public debt and all. By one firm to another, this and all should be excluded. So this is the list for exclusion part. Okay, so hints for calculation purpose include income from people in jobs and in self-employment, profits of private sector business, please include it. Rent income from the ownership land, yes, please include it. Okay. Calculation method is also called as the aggregate demand method. Okay. Is also called as income disposal approach method. Okay. If I have 10,000 rupees in my hand, how much I'll spend? 20,000 rupees. Okay. No, that's not the content. If I have the 10,000 rupees, I will spend 10,000 rupees. என்கிட்ட என்ன இருக்கோ அந்த பேமெண்ட் பண்ண அப்ப நான் எவ்வளவு பேமெண்ட் பண்ணணும் அவ்வளவுதானே எனக்கு வந்துச்சுன்னு அர்த்தம். Okay. So income disposable or also what you call as the outlay method. It is suitable for having growing facility in the use of commodity flow method, like estimate the expenditures and increasing proportion of national income and everything and all. Actually, this method is somewhat simple. What is the expenditure? Pull up all the expenditures and you sum, you get that final value, right? That's what you call as the GDP at NP over here. So you take the private final consumption expenditure C, okay? You take the government and public consumption expenditure G. Make spend பண்றீங்க C. Government is spending G, okay? Related to capital formation I, okay? We have individuals, organization, government, what and all we have? 4 economic sectors. What are the 4 economic sectors we have? Please join. What are the 4 economic sectors? Individual. Okay. Then firms or what you call as organizations or corporations. Then government and external world. E or R. When you come for individuals, I will talk about my own consumption now. இல்லையா 1 month எவ்வளவு மேம் நீங்க செலவு பண்றீங்க 1 year எவ்வளவு செலவு பண்றீங்க நான் எனக்காக என் வீட்டுக்காக செலவு பண்ணணும் தான் பண்ணுவேன் சொல்லுவேன் ஓகேயா so this is about C okay consumption of individual personal expenses like next is firms I okay next is government G next is outside world நாலே இப்படி நம்ம ஃபாரின் பார்க்க கூடாது நம்மளோட ஃபாரின் மட்டும் தான் பார்க்கணும் நம்மளோட இன்கம் ஃபாரின் தான் பார்க்கணும் so there will be exports minus imports which is x minus m. Please highlight. This is not m minus x. This is what? X minus m. If in the question m minus x is given now, you have to subtract. Okay. Add C, add I, add G. Okay. Add what? Net exports. Okay. In case in the question m minus x is given, you have to subtract. இதுதான் அடிக்கடி ட்விஸ்டா கேக்குறாங்க ப்ளீஸ் கொஞ்சம் லாஜிக்கலா அண்டர்ஸ்டாண்ட் பண்ணிக்கோங்க ஓகே probably when we talk about Keynesian theory we are going to discuss this full complete content in 6.2 okay we are dealing 6.1 now 6.2 we'll discuss about that so income flow flawless from the table 8 okay so if net imports are given then it has to be deducted because net imports is m minus x okay shall I take over overall note all the methods should arrive equal value only. The methods are different, but any values has to be same only. It's actually 3D view. There may be some measurement errors because What method is in a better way compared, for example, if you talk about expenditure method, in one angle that seems to be method. So measurement errors may be there, but the value should be same. Okay. Different methods may be giving different insights depending on the structure of your economy. Okay. So when we talk about income method, if everybody is paying income tax, then it's fine. I know வெத்தலை லேடி ஒரு வெத்தலை விற்கிற பாட்டி இருக்காங்க மார்க்கெட்ல. ஓகே, எவ்ரி டே ஷி earns 1000 rupees selling what? வெத்தலை. 5 ரூபாய் கேட்டா 3 வெத்தலை வச்சு தருவாங்க. ஓகே, நல்லா தெரிஞ்சவங்களா இருந்தா 5 வெத்தலை வச்சு தருவாங்க. How much is earning per day? 1000. How much is paying tax? அப்படின்னு என்னமான்னு கேட்பாங்க. இல்ல பாட்டி, நீங்க 30,000 சம்பாதிக்கிறீங்க, உங்க டாக்ஸ் கட்டணும் அப்படின்னு சொன்னா, பாட்டினால கிளவி சீனியர் சிட்டிசன் வந்துருவாங்க, விட்டுருங்க. இன்கேஸ் ஓகே, இப்ப யங்ஸ்டர்ஸும் விற்கிறாங்க இல்லையா, ஸோ நீங்க போய் டாக்ஸ் கட்டணும், அதனால அவங்க கிட்ட போய் டாக்ஸ் பேச முடியாது. Okay, see what I'm trying to say here is different structure of the economy having different methods, so it depends on value addition method for 4 territorial sectors, income method for, if factor production is given, then you'll go for factor income method. Okay, and likewise expenditure method for economic sectors. If 4 economic sectors are given, then you'll go for expenditure. Okay, so we have next table, table F, dealing with personal income and disposable personal income. Let me finish off this table, then I give you some time and have a look. So ultimately we have found national income. Is it okay? Using the 3 methods. Now, what is the income received but not earned? Please highlight. Income received but not earned. நீங்க earn பண்ணல, ஆனா you have received. For example, not for example, listed transfer payments to the household. Who is giving? Pension. Transfer payment, pension. Who is giving? Firm. You are working in an organization, you will get pension. Okay. Government is giving government pension, NPS scheme. Okay. Transfer payments to the households from whom? Government and firm. Current transfers from firm, government actions, fees and fines that is being paid to the federal, state, and interest on national debt. If these items are there, please include it. Okay. Include on what? National income. And sometimes this is income received. Sometimes income will be earned but not received. நீங்க கம்பெனில இன்வெஸ்ட் பண்ணீங்க, கம்பெனி இன்கம் earn பண்ணிருந்துச்சு, டிவிடெண்டா கொடுக்கல, இன்கம் earned, but you did not receive it, you did not have that in cash as hand. Okay, in that case, for example, the listing undistributed corporate profits, net interest payments made by households to, see this the opposite point of this one. Can you please relate it? Here, this point I'm highlighting transfer payments to the households from firms and governments. This is made, payments made by households to F&G. Corporate profit, income from property and entrepreneurship accruing to government administrative departments. Income from domestic product accruing to government. Savings of non-departmental enterprises, private corporate sector, contribution of employees to social security. If all these items exclude that one, after deducting, you'll get a number, right? You get a figure. That figure is what you call as the personal income. இதுதான் கையில உங்களுக்கு வரும். Okay. Even though you get this personal income in your hand, you have to pay direct tax, that one, this one. Okay. Which means personal income tax has to be paid. Okay. And other non-tax payments will be there, which has to be paid, like pension, provident fund and all, PF and all, which will not get it. It will be pooled in your EPF account. There's something called as EPF account, Employees Provident Fund account. It will be pooled over there, and probably after a certain number of years of period, you will get it. Okay. So, அதெல்லாமே நீங்க mandatory pay பண்ணி தான் ஆகணும். So, that has to be excluded. If that is excluded, பிடித்தம் போக கையில வரும் சொல்லுவாங்கல்ல. What's that one? Disposable personal income. Okay. So, in this table, from national income, we are adding income received but not earned, subtracting income earned but not received. You'll get something called as personal income. In that, you remove the personal tax and non-tax payments. You'll get something called as disposable personal income. Is it okay? Please have a look. Check whether you're able to manage. See, all these detailings I have given over here. So you can just have a NNDI, net national disposable income, and gross national disposable income. We have net national income. In this, you include net current transfers from the rest of the world. Okay. When we say net current transfers, please highlight. See, we are using, see, we will not consider add this one and let this one because the term itself is having net. அப்ப எதெல்லாம் include பண்ணோம், எதெல்லாம் exclude பண்ணோம்னா, you will include all the receipts, you will exclude all the payments. Okay. So net taxes on income and wealth receivable from abroad and net social contributions and benefits receivable from abroad, which means if you have received it, it's a receipt, so you add it. If you have made the payment, it's a payment, so you less it. Okay, reduce it. So once you do this arrangements or this adjustments, you will get something called as NNDI. This is net. From net, you have to get gross. Okay. See, gross to net means you deduct depreciation. It's net to gross, so reverse it, which means you add depreciation. One on the depreciation less பண்ணிடாதீங்க, தப்பு பண்ணிடாதீங்க. Okay, இதெல்லாம் நார்மலா பண்ற தப்பு. Let me continue. Directly, I'll go for domestic income. Sorry, this one. When you talk about current transfers, we'll not talk about the current transfers from the primary income. Okay, we should not consider the primary sector. Let me go for domestic income. We have two types of domestic income. One is public income and another one private income. When we say public income, follow table H. We have NDP, net domestic product at factor cost, not market, at factor cost. In that, you deduct income from property and entrepreneurship accruing to the government administrative departments. Savings of non-departmental enterprises, you need not worry too much about these terms. Probably it will be given directly in the question. Okay. So savings of non-departmental enterprises deducted. Then if you talk about, that is about public income. Then I will talk about private income, which is accruing to the private sector. Public means accruing to the government. And see, when you talk about government, you have departmental and non-departmental. So that's about public. When you consider private, we'll consider directly dealing with private from all sectors within and outside the country also. Includes factor income and also transfer income. So you'll follow table H for this one. So table I. You'll find NDP at FC. In that, you deduct income from property and entrepreneurship accruing to government administrative departments, savings of non-departmental enterprises. You will get something called as factor income from NDP accruing to private sector. In this, you add NFIA. In this, you add if there is available national debt interest, current transfer from government, other net transfer from rest of the world. Ultimate figure will give you the private income. Is it okay? So probably you should have an idea about all these things. What do you mean by stock? Quantity of a commodity that is constant at a point of time. See, today I am receiving 10 kgs. Okay, tomorrow I am receiving 15 kgs. If I am talking about today, the current time, it is 10. Tomorrow means I have to talk about tomorrow only. So that's about the quantity of a commodity that is constant. See, if I talk about this time, it is constant 10 kg. Okay, that's about stock. It will become static. Actually, the stock value is dynamic. மாறிட்டே இருக்கும். But நான் இந்த மினிட்டுக்கு, இந்த செகண்ட்ஸுக்கு, இந்த டேக்கு, இந்த இயருக்கு பேசுறோம்னா it becomes static. That static value, that constant value is what you call a stock. And flow is period of time, it will be changing, it will be varying, right? And we already done with PQLI, and NI should include loss of natural resources also, yes, obviously. And purchasing power parity, PPP method rather than US method. Actually, we are using US method for calculating GDP and all. Probably I'll go for some internet surfing. GDP for 10 years for 10 countries போலாமா? Is it okay? Is it visible? Is it visible? See this one. I have taken for 2025 alone. Okay, not for the 10 years. I have just taken for 2025 alone. Can anybody help me out reading the heading? Anybody louder? He contains the largest domestic product in 2023. Continue. Yes, in billion US dollar. நீங்க இந்தியாவோட ஜிடிபி கால்குலேட் பண்ணோம்னா இந்தியன் கரன்சில கால்குலேட் பண்ணா பரவாயில்ல, யூஎஸ் கரன்சில கால்குலேட் பண்ணீங்கன்னா புரியுதா? So actually this might be changing. Probably why I'm changing now, why I'm using this word changing now. Dominant currency வந்து US dollar, but nowadays it's changing, right? Most of the nations are using now they want to go with brick currency. Brick currency nu introduce பண்ணாங்க தெரியுமா? You haven't noted that now? Please have a Google search today because that's all necessary for economics angle. Something they have introduced called as brick currency, where the brick nations they can use that currency for commodity purpose and all. And some 4 or 5 countries they are using Indian currency as a common currency. அதெல்லாம் பண்ண ஸ்டார்ட் பண்ணாங்க. Earlier days US dollar வந்துட்டு டாமினன்ட் கரன்சியா இருக்கனால அது ஓகே, பட் இப்போ மாறுது. So that's about the like contravention thoughts, like நீங்க ஒரு கண்ட்ரியோட ஜிடிபி ஆங்கிள் இன்னொரு கண்ட்ரியை மெஷர் பண்ண கூடாதுங்கிற மாதிரி பேசிட்டு இருக்காங்க. So if you check here, probably this is for United States. What is for 2025? 30,507.22 US billion dollar. Okay, 2024 it was 29. How much is the difference? How much is the difference? Hardly 1,200 or 300, right? Not exact value I'm telling. See, it's from 2024 is 29, 29,184. 2025 it's 30,507. Okay. What about next country? China. 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 19,231. 2024? Hardly $500. Okay, $500 billion. Okay, billion US dollars. Here is 1,000 change for United States. Here it is only 500 around. Okay. And what about here? Germany. 4,658.4744. ரொம்ப மைனூட் சேஞ்ச் மாதிரி இருக்குல்ல, even though in billion dollars. Next, India. 4,187, 3,909. Because there is a big change from 2024 to 2025, US is still in the first place. And the change ஒருவேளை இந்தியாவுக்கு வந்திருந்தா, ஜெர்மனிக்கு வந்திருந்தா வேற மாதிரி இருக்கும்ல. And after that only stands Japan. You know, this position was recently changed. This is I'm checking for 2025. If you check for 2024, see what's the value for 2024? India, please join. For Japan, see what's I'm asking for 2024. 2024 Japan is 4,026, above 4,000. For India, below 4,000. So India was in the 5th place. It surpassed Japan. Japan மேல ஒரு எக்கனாமி இல்லைன்னு சொல்லிட்டு இருந்தோம். இப்ப சொல்லக்கூடாது. Yes, we have surpassed Japan. So probably in another 5 years, 2030, it's actually not 5 years also, not 2030 also. 2027 itself, we are expecting we'll be surpassing Germany. Okay, we'll be surpassing Germany, we'll be in the 3rd position as for GDP. இன்னொரு drawback என்ன தெரியுமா? Probably I cannot compare with US. I can compare with China. Largest in population number தான். அப்போ ஏரியா வைஸ் கூட நீங்க பார்க்கணும் ப்ரொபோர்ஷனேட்டா. கரெக்டா? யூஎஸ்ல வந்து ஒரு ஏரியால 100 வீடு இருக்கிற இடத்துல இந்தியால ஒரு ஏரியால ஒரு ஊரே இருக்கு. 100 வீடுல ஒரு ஊரே இருக்கு. அப்போ அந்த ஒரு கான்ட்ராவர்சியல் தாட் போகும். Okay, so probably 2030 will be surpassing. 2030 means exactly not 2030. Probably we may surpass before itself. 2027 itself we may be surpassing Germany. Check பண்ணி பார்த்துக்கோங்க, நோட் பண்ணி வச்சுக்கோங்க. Definitely this is all happening. இதெல்லாமே இப்போ ரீசன்ட் பயங்கர ஹாட் டாபிக்ஸ் போயிட்டு இருக்குதுல்ல. And probably China, I don't know, because it's a very big gap, right? See, China விட்டுருவானா அவ்வளவு சீக்கிரமா சர்பாஸ் பண்றதுக்கு? China is directly competing with US. Okay, so that's there. Probably for China and US to surpass, we should be in the year 2070. I think so. 2050 பிறகுதான், I'm very sure, because இப்ப இருக்கிற ஸ்பீடு பார்த்தா 2030, so another 122 decades, 20 years, 2050 or 2060 வரும்போது we may be in the first GDP. Okay, fine. So let me continue here. So when you compare which method to apply here, we have to actually go for purchasing power parity method rather than what? US method. Okay. So nature of National income, it's a macroeconomic aggregate. Please join with me. Please join with me. Is somewhat we have finished some 80% of the topic. Some small remaining part is there. It's a macroeconomic aggregate, which is nothing but national income is equal to all the aggregate supply. Is it okay? Equals to the value of the aggregate supply. We'll be using nominal GDP and real GDP. If you calculate this in proportion, nominal GDP divided by real GDP, what is nominal GDP? Calculating for the current year. What is real GDP with the base year? So if you compare these two values, nominal GDP divided by real GDP, if you present in percentage, actually this is a relative value, right? You will get the index. It's called as price index. Okay, why it's called as price index? Because we are calculating the value. Okay, it's called as price index. Also, it's called as GDP deflator, often asked in the question. So when you go for calculating NI at constant price, which is NI at current price divided by the price index. This is how you price relative. இல்லையா இதன price relative சொல்லுவீங்க. And how you find the inflation rate? You find GDP deflator at the nth year minus GDP deflator at the earlier year. Nth year na, 10th year na, 10th year, 9th year. Okay. Divided by GDP deflator at n minus 1th year. This you are finding the rate, percentage interest money. Okay, you're finding the rate. So nth year minus n minus 1th year. From where you're comparing this? N minus 1th year into 100, we get it as inflation rate. Okay. Is it okay? More on GDP. I have discussed each and everything in detail. I'm not going through this one. System of regional accounts in India. Yes, we have this integrated database. Nowadays, we have this. If you're buying or selling any property, it will be taken to the government record called a Sahasri record. Sahasri record. Probably, if you find time today, you can please have a look on the Sahasri. Sahasri is a central registry record. Okay. So, if you're buying any property, now it will be taken to the government. Government or integrated database maintain பண்ணது அதுல எல்லாமே வந்துரும். So likewise we have this integrated database for accounts, all the transactions taking place in the regional economic. Helps in decision making at regional level. Okay. At state level. So this is whole of India. When you go at state level, it's been prepared by state income units, state directorates of economics and statistics, assisted by CSO. What is CSO? Central of Statistical Organization or Office. Okay. Advices on conceptual and methodological problems. And we have this also for supra-regional sectors that cut across state boundaries. If one state is involved, we'll talk about state and state income. If more than one state is involved, we'll talk about supra-regional. Is it okay? More than two state involved. So economic contribution will be combined as a whole, as we cannot be assigned to one state and it cannot be allocated directly to one state. So we allocate on relevant indicators basis. So what are the sectors involved here? Railways. ஒரு ஸ்டேட்ல இருந்து இன்னொரு ஸ்டேட் போகுதுல நேஷனல் ஹைவேஸ். ஒரு ஸ்டேட்ல இருந்து இன்னொரு ஸ்டேட் போகுதுல communication system, banking and insurance, central government administration and all. Then we'll go for GDP per capita income, real GDP divided by population. See, இதுல தான் நம்ம அடி வாங்குறோம். GDP per capita income. Population அதிகம் இல்ல, அப்ப GDP கம்மியா தெரியணும். கரெக்டா? So GDP per capita income. This is all over India. If you're calculating per capita state income means you have to consider NSDP. NSDP is nothing but the what state level domestic income within the state divided by mid-year projected state population. Please highlight. We are considering here mid-year projected state population. Mid-year projected. Okay, இது வரும்னு expect பண்றோம்ல அதான் mid-year projected. Okay. And state income is not duplicated. We have to understand this one. So part A is done for. Okay. Before going for part B, again I want to go for a small reference on this is 2025 GDP, right? I want to go for a small reference with respect to 2026. Paklama. Shall I go for 2026 GDP? If you raise a question, we are in the year 2025. Why are you talking about 2026? Is it right? The question raise ஆகணும்ல நம்ம 2025 என்ன முடிக்கல 2026 போயிட்டீங்க மேம். So it's nothing but projected GDP. Let me check whether I'm getting the exact picture. Actually, my network is a bit slow. So, part B, introduction. Actually, when you go for a chapter material, what are the things we discuss? This I have directly taken table wise. The miscellaneous content, which is left over, the theory content, is covered in part B. Okay. So, when you talk about a performance of a country, we actually depend on goods and service, the output you create. That's a production. If I ask you how far you're richer, okay, don't take it personally. I'm just for colloquial discussion. How far you're richer? What do you say? I have a house, ma'am. Own house, ma'am. I have a bike, ma'am. I have my phone, ma'am. I have this much of costly dresses, ma'am. Okay. ஓகே அம்பானி ஃபேமிலி கிட்ட கேட்டீங்கன்னா ஒரு ஹேண்ட் பர்ஸ் பவுச் யூஸ் பண்றாங்க ஒரு ட்ரெஸ் வேர் பண்றாங்க எவ்வளோ அது பாட்டுக்கு போடுறோம் க்ரோஸ் கணக்குல தான் போடுறோம் ஓகே ட்ரெஸ் எல்லாம் ஒரு வெல்த்தா அப்படின்னு பாத்தீங்கன்னா that shows you wealth னா ப்ளீஸ் add it ஓகே if I check how many mobile phones you have மேம் நானே ஒரு நோக்கியா 1100 யூஸ் பண்ணி ஓடிட்டு இருக்கேன் மேம் இதுல இருந்தா மொபைல் see it's not that way you use a mobile phone நிறைய பேருக்கு அதுவே இல்லை you use your mobile phone you use Apple phone you use Android phone you use any phone it's being considered as wealth okay how many phones you have at your home not you personally have it your family members that's all considered as wealth இதை வச்சுதான் நம்ம வெல்த் இல்லைன்னு சொல்றோம் சேம் லைக் ஒரு கண்ட்ரியோட பெர்ஃபார்மன்ஸை பார்க்கணும்னா which one is wealthy sorry which one is wealthy you see how much you produce that's why we have this now new concept make in India make for the world எக்கனாமிக்ஸோட வராப்பரே அதானே மேக் இன் இந்தியா மேக் ஃபார் த வேர்ல்ட் இந்த ஒரு சிங்கம் போட்ட பிக்சர் இருக்கும் ஓகே so like accounting conventions we have conventions for measuring and analysis of performance exists so national income accounting this has been brought pioneered means டெவலப் பண்ணவர் வேற ஒருத்தர் இதுக்கு இம்பார்ட்டன்ஸ் கொடுத்து இதுதான் சொன்னவர் சைமன் கிஸ்னஸ் அண்ட் ரிச்சர்ட் ஸ்டோன் இட்ஸ் an important macroeconomic agreement aggregate forms the basis of modern macroeconomic analysis provides detailed measures of all the value composition of national output and incomes usefulness I'm not going line by line let me have the discussion on the headings alone analyzes and evaluates the short run performance okay second it distributes the pattern of the demand what is the future demand everything you can project it third one economic welfare fourth one nature of national income probably for different sectors we are discussing and everything so I'm not going line by line and fifth one provides a quantitative basis. Actually, we're calculating, right? That's why quantitative basis. And it gives a comparative study. You get different categories every comparative study. And gives an international comparison. When you want to compare Japan and India, you want to compare Germany and India. How you compare it? With the help of GDP only. And it's combined with financial and monetary data. Okay. And it's an indispensable variable because to know about how far we are, in which position we are in the globalized version, we have to measure in terms of GDP. So it's an indispensable variation. Different concepts of NI. So if you go for national income accounting, uh, uh, this one, the records keeping and all, we have to go for the definitions and concepts. We have to understand a complete accounting framework. So definition is a measure of total flow of earnings for the factor owners, land, labor, okay, capital and what? Entrepreneur. GDP is a measure of production activity, follows from production boundary. Measurement of NI in India, we have this division, already have discussed in an annexure page, I'm not going word by word. Mandate to use GDP at current prices only. And revision, probably MOIP, they changed the base year from 2004 5 to 2011-12. We have done this in index numbers. Statistics are discussed on our shifting of index numbers. Okay, we have already the base, earlier the base year was 2004 to 5 and they have shifted to 2011 to 12. Okay. Then circular flow of income. Yes. When we talk about circular flow of income, we have to discuss in three phases. Actually, the circular phase of income is a continuous one. Because of this, because of this. That's why I say this is a circular flow. It flows simultaneously and results to three different methods. This three different methods is what you call as the income method, expenditure method, and other methods. Okay. So probably, can you find a picture over here in the next page? Somebody is producing goods and services. Am I right? Who's that somebody? The organization. And to make this production happen, they have to pay rent, wages, and they'll get interest and profit. That's yielding. So this is nothing but distribution of factor incomes. Who's receiving the rent? The landowner. Who is receiving the wages? The employee. So that becomes the factor income. And with the help of that, what he is going to do? பீரோல போட்டு வச்சுப்பாரா? இல்லையே, சாப்பிடணுமே, ட்ரெஸ் வாங்கணுமே, அதுக்கு பணம் வேணுமே, இந்த பணத்தை தானே யூஸ் பண்றாரு. So he is disposing it. Okay. He buys the food from the grocery market. He buys the grocery. Is it okay? So this is what we call as circular income. Okay, we cannot say this is stopping over here itself. It just goes and goes. You cannot say it stops here. Okay, simultaneously நடக்கும். Is it okay? Shall I take over? So more on expenditure method. When you talk about final consumption expenditure method, we can discuss as private final consumption expenditure method, where all the final goods and services, volume means what? All the quantity, how much is spent, to households and non-profit institutions will be taken with respect to market price. Actually, we are doing everything in terms of price now. Okay, here we are considering quantity into price, which will give you value. Am I right? Price into quantity is value, right? That value has to be considered. Okay. Profit institutions, probably they will be serving households for consumption and not for use in production. What are the things you are going to include here? You will include primary products. What do you mean by primary products? We are producing for own consumption by the households. Okay. Payments for domestic services, where one household is lending to another. The net expenditure on foreign financial assets and net foreign investment. And you will be excluding land and building residential buildings purchased or constructed by households. You should not include that, because that will be included in capital formation. Construction capital formation. Second is government or public final consumption method. First one is private consumption. Second is public consumption. When you talk about public, we are actually dealing with government public. Okay. So you have to include all the money spent for collective services, since these services are not sold in the market. Am I right? There's a festival happening in my area. Immediately, we need to follow law and order. ஒரு 100 policemen இருக்கிறாங்க. Okay, அதுக்கு நம்ம கிட்ட பணம் கேட்கறது இல்லையானா, there's a duty the government has to spend it. Okay, so those are not sold in the market. You cannot buy in the market, but that will be made available. Okay, and transfer payments like pensions, scholarship, those things has to be excluded. Okay. So second, gross domestic capital or investment formation. Country's total expenditure has to be taken. It is not consumed but added to the nation's fixed tangible assets and stocks. So this is with respect to what's the heading bar? Capital. Bridge construction. So includes we are acquiring a fixed asset, machinery and equipment like final expenditure won't account production, expenditure on construction, change in inventories, and acquisition of valuables like jewels, works of art, accumulation of stocks. This one all has to be considered. Okay. Net profit, net export method. See, already we have done this one. Net export is usually X minus M. It can be negative and it can be positive. Agree with me? Okay. When it will be negative? X minus M is negative, less than 0. Epo. M is greater than X now. Correct? X is 5,000. M is 5,100. Definitely it's going to be negative. Why? Because this is higher, greater. Okay. Likewise, net imports will be M minus X. Please highlight this one. Net export is not equal to net imports. Net export is X minus M. Net imports is M minus X. You should be very, very careful. Is it okay? Right? GDP and welfare. This I was discussing in the Google page. Why GDP is not a perfect measure? Because you do not compare with same capita income. US la population கம்மி, இந்தியால அதிகம், சைனால அதிகம். அப்ப நீங்க per capita income வச்சு பாத்தீங்கன்னா US will not be in the first place. You agree with me? So who will be the first place? No, China. Because there's a lot of difference between China's GDP and India's GDP. Population wise, India is bigger now, but still value wise, GDP வந்து China தான் அதிகம். And population wise, India and China is closer. China and India China and India closer. Okay. And second, related to technology also we have to discuss. Probably when you go for technology, managerial innovations or also other things you have to consider. Technology, managerial innovations or also other things you have to consider. Hidden productions will be there. Yes, sometimes many are evading tax, right? You don't pay the tax. How do you know what is your income? Okay, you're selling most of the things illegal. This is not accounted, right? Okay. And non-market production, probably I'm not going to do economic contribution. I'm going to make for my own self. Okay, like factors that might be affecting health of country citizen, education levels, political participation. These are not affecting. So you cannot exactly say. And the laws of leisure time. Yeah. See, I work 20 hours a day. Okay, அப்படின்னா என்னோட ஓன் பர்சனல் லீஸ்ட் டைம் நான் ஸ்பெண்ட் பண்றேன். அதுக்கு நீங்க வேல்யூ பண்ணவே இல்லையே. Sixth one, with respect to what is this economic bads, like there is crime happening, there is so much of pollution, traffic congestion. See, this and all is making US in a better way. US la area perusu, population kammi, so there will be no traffic congestion, nothing to talk about pollution and all. But what about Delhi, India's capital? அவ்வளவுதான். பொல்யூஷன்னுவாங்க, ஏர் குவாலிட்டி காலின்னுவாங்க. Seventh, volunteering work. See, I do voluntary service. That's not been evaluated, right? So that's over there. And contributions to our economic welfare, like gender equality, these are all considered. Externalities, probably this will discuss in another one topic, positive and negative effect. Someone is doing and I'm facing the trouble. Externality, negative effect. Someone is doing and I'm facing the benefits. Someone is planting the tree, my neighborhood. I am getting the fruits from that. Okay, that's a positive externality. Okay, that's about this one. And distinction between productions. Sometimes it will be making better and sometimes it will be making worse and all. So examples, I leave it to you. Limitations, already I've discussed. I'm not going line by line. You can please have a look. I think it's done. So that's about 6.1.